Hey everyone, so here just to show my latest trade setup. So we're currently looking at AUDCAD, the Australian dollar, versus the Canadian dollar. And yesterday I closed some buy trades, and let's pull out to the longer time frame a little bit so we can see what happened. So I haven't actually marked it up on here, but basically, I had buy trades open, and I kind of like was ideally I should have held it for longer, but basically the buy order opened up around this level. You make it a little bit easier. I'll mark it with uh, I put my buy in around there. Let's make that green a bit more evident. And then it closed. I closed it around about here, just because it was looking like the market was preparing to reverse, which it kind of did, but then it then kind of had a real push later in the day. But it's fine. We closed at a profit, so that's positive. Anyway, as you can see here, it pushed kind of previous days key levels. We kind of like reached this like area of resistance. I'm calling it. Earlier in the week, we had these highs up here. It looked like it was like just starting to push that level up here. Now, realistically, I could have waited to open a trade if it like pushed further up here, which I'm anticipating it likely will do, but there's a good chance it may reverse off this point. So I didn't go full send on it, but I have opened a new trade up here, which I have marked up. To explain these rectangles at the top here, let me pull it into half an hour because it's a bit easier to see. So the reason why I marked up this way actually is more accurate in the 15. Here we go. So back in the last week, we saw a pretty significant fair value gap created here, which hasn't yet been retested, which, like I said, I'm kind of expecting to happen. But we do have this area of resistance here. It's kind of like in this region here, really, where like over that week, it struggled to get back above this area here, which is where we're playing at the moment, which is why I did enter this trade. But we do have this space here, so like more than likely it's going to the market's going to try and push up into this region here, possibly test this fair value gap. Now, obviously I've entered this initial trade here. I haven't gone full send on it, so I've got plenty of margin to work with. If it does retrace and continue to push upwards, I might actually extend my my stop for this trade actually to a little bit above this area. But anyway, if it does push up into this area, especially if it gets tests the fair value gap that I showed you that was created last week, then and then starts to move back in our direction, I'll possibly enter an additional sell trade. So that's what I call grid-based mean reversal trading. It's typically how I do things, where basically I'll have decent level of confidence in an initial trade, where I'll put down like a small, a small to average level of margin. And then I'll have an area of high confidence where if it tests that area and then the market reverses back on itself in my direction as I'm anticipating it, then if it does that, this is just broadly speaking, but it applies here, then I am I'll then enter an additional trade with larger lot size, i.e. risking more. Now this setup here specifically, I'm expecting I'll probably close it around this level for obvious reasons. The market kind of rebounded when it reaches this level, and if I zoom out a little bit more, cool, that view's gone a bit funny. Oh, it's because I've gone to the 1 minute, not the 1 hour. That's why. Here we go. Where have we gone? 4 hours. Here we go. So, and the reason why I'll look to close around this level. I haven't got a fixed take profit, but I'm kind of anticipating for the market to rebound down to this level here, approximately. So that's why I've kind of like roughly laid it out like that. If we achieve that, then like I said, this is what I expect to do, and that approximately delivers about a 2-to-1 or a 1-to-2 risk to reward, however you want to put it. So yeah, it should be quite a big move. I mean, what's it saying here? Yeah, like I said, right now it's kind of consolidating. I'm looking on my phone as well because that's where I've got the actual kind of like the actual trades open. Yeah, it looks like the market's kind of consolidated. Let me get it into a shorter time frame. Let's put it down to 5 minutes. That might give a better idea. Let's just stretch this out so it's clearer to see. Here we go. Right. So this is, it's not exactly because this is TradingView, but my trade is actually I'm actually managing it through MetaTrader. But it's approximately there. So right now we are kind of in profit, but it's basically break even. Right now the market's consolidating around this level here. Now that's kind of normal at this time because we're just getting ready for the for North America to wake up. So over the next, I expect over the next half an hour to the next hour, because right now it's pretty much 12:30 in the UK. Oh, you can see it down here as well. It's pretty much 12:30 in the UK. Usually at 1:30 in the UK, the market starts to pick up a lot of volume, and that's when typically the most significant moves of the day will happen in terms of during my day. Also during the Asian market trading time, however, because it's a Friday, that doesn't so much apply today, because the market closes for the weekend. But whilst the American market is open, I'm anticipating for it to continue in my direction. Let me just put it back to a longer time for us, put to 15 minutes. Yeah, so I mean, it's starting to work in that direction. We kind of need to like break past this point here for me to have like a high level confidence it's going to go in that direction. But like I said, I do anticipate that likely when North America wakes up, there may be the market may try to uh, go into a bullish trend. More than likely, though, I think that's more likely to be a liquidity grab. And then we'll see a sharp retracement. And that's what I'm anticipating. No guarantees. We'll see how it goes, but that's what I think is going to happen. So anyway, that's kind of a further analysis of my trade for the day to cap off the week. I wasn't sure if I was going to enter a new trade this week. When I closed my buys yesterday, I was like, I'm when I closed it at least, I expected to have a buying bias, but then towards the end of yesterday, I saw how overbought the market was, which I've got an indicator here that kind of like helps highlight that. It kind of partially reads off the RSI, but and it kind of like gives me an indication if the market's overbought or oversold, and it will highlight it. Such as here, like here it considered it was oversold, and again here, and it was obviously at that point where I had like confidence, and that's when I entered that trade yesterday, which closed around here. So yeah, I wasn't expecting it, but because it did end up like significantly overbuying, I was like, I think I'm going to prepare for some sales. We'll see what happens. Like I said, over the next hour or two, that's when things are more likely to move significantly. But yeah, I'm prepared for it to reverse on me a little bit, test this area, likely this fair value gap here, like I said, that was created last week. But we've got this kind of like area of interest here, and I think it's fairly likely it will retrace and test this this area of interest, more likely the fair value gap. But we'll see. If that was interesting, then please like and subscribe. If you want to follow more kind of daily updates, you can find me on patch.trades on Instagram. And yeah, thanks for listening and have a good day.